Good afternoon, traders. Future here, FutureMeDead.com. I'm going to do some Elliott wave analysis of the S&P mini contract, and I want to start with the chart that I posted on July 27, where I was calling for a new low to complete a larger degree impulse wave. So let's take a look at the substructure from the very top. This top was put in on July 20. So from here we have a small initial 5-wave decline to complete circle wave 1, a 3-wave counter trend move in 2, followed by an extended third wave. Wave 1, 2, 3, 4, and 5. This completed wave 3. So my posture from here was to expect a 3-wave counter trend move to terminate in the area of the preceding 4th wave before working lower in one final new low in circle wave 5 to complete minor degree wave 1. From the current price structure, we can identify 2 key levels. The first one was 2056.50. And the reason that's a key level is because a new low would in fact complete an impulse wave, which would tell us that the trend is down, and we can formulate a bias moving forward. The next key level is 2102.25, where we have wave count invalidation. Should wave 4 continue to rise from this low and go above 2102, it would overlap the price territory of wave 1, and we can't have that under the Elliott wave principle. We would have what's called overlap, and we can no longer label this as an impulse wave. It would have to be some sort of correction. So let's move forward to the live chart to update this in real time and see what's going on. So you can see that I've already updated this, and I've changed the count from a 1-2 to an AB. And I've left the impulse wave because it is an impulse wave. I can't change the price structure, but I can change the labels. This is an impulse wave, so this is wave C of an ABC decline that completes a larger B wave. So moving forward, let's analyze this and see what we can come up with. And let me backtrack a little bit. When I was looking at this in real time, and I was expecting a wave 4 to terminate in the area of the previous 4th wave, we certainly got that rally to this area. But take a look at the price structure. This is a small 5-wave move. And so that was a big clue to me that we were going to see higher prices. The reason is a single impulse wave cannot encompass an entire correction. It has to be part of a correction. So I knew that this wasn't a top. I knew wave 4 at the time was going to go higher after an initial small decline. But this continued to go higher into the invalidation level. So let me drop that invalidation level that I showed you in the previous chart so we can see the overlap here. You can see here the price simply just went too high. Okay, let's get rid of that. So what do we have here from this bottom? To me, this is an impulse wave. This is a 5-wave move to the upside that we can lean against with a bullish bias. Let me drop the labels. 1, 2, 3, 4, and we have a small ending diagonal, wave 5, to explain this overlap here. Okay, this in turn completes wave 1. Okay, so once we have 5 waves up or down, we expect a 3-wave counter trend move. The operative correction that is underway is a flat correction with an internal count of 335. Okay, this is the internal substructure of wave 2. From this top, we have a 3-wave move down, 3-wave move up, and an apparent impulse wave in wave C down. So this is the 3-3-5 pattern that I'm talking about. Let's drop those labels. Wave A, B, and C to be seen at a later time, which in turn would complete wave 2. What else can we arrive at this chart? The invalidation level. Let's highlight that. The invalidation level is 2056.50, the previous level that we were looking at. The reason is wave 2 cannot retrace more than 100% of wave 1. If price drops below 2056.50, then this is not an impulse wave. It is part of a larger correction, and we would have to relabel it at that point in time. But until then, this calls for higher prices after a marginal new low. So what else can we arrive at? Well, we know corrections tend to travel, have a tendency to work within a parallel channel. Okay, you can see here price has dipped below it, but the lower line may be acting as resistance for a wave 4. So this also sets us up for tomorrow's trading day. Unless something happens overnight, I am expecting this to go lower in wave C to complete wave 2. Let's go ahead and drop in our Fibonacci retracement levels. I like for second waves to be deep. I don't like shallow second waves. I tend to miss out on those. And the reason is I like deep corrections. I like for price to enter the vicinity, the area near the invalidation level of 2056.50 because it lowers my risk. I know where I'm wrong. It's always important to ask yourself, where are you wrong? Let's drop this in here. This is most definitely where I would have my stop loss. Remember, traders, never enter a trade without a stop loss. You need to identify your risk. If you enter a position without a stop loss, you're shortening the life of your career as a trader. Let me just put that out there. Okay, so you can see this is certainly a deep retracement because we're just shy of hitting the Fibonacci 76% retracement level, which is kind of like the last stop in regards to Elliott wave. You don't want to see it go past this. It can. Remember, the rule is wave 2 cannot retrace more than 100%, so it can retrace 99%. So this looks good, and the reason this looks good is because let's say we enter into a long here at 2069 with a stop at 2056.50 and with a target above the high of wave 1. You're looking at a trade with a favorable risk-reward ratio. This is a risk-reward ratio of greater than 3. I'm not going to identify a target just yet. It's a little premature. Let's bottom out first. But this is certainly setting up to be a good potential trade here. Remember, it's one thing to have a call to identify where you think a stock or forex currency pair is going to go. It's a completely different animal to identify a trade with a favorable risk-reward ratio. So keep that in mind. Remember, if you take anything away from this video, is to identify where you're wrong and never trade without a stop. So that's it for now. I can't see anything else that I want to do to this chart without over analyzing it. I see this as a second wave move. This is a textbook 335 flat correction. We still need a new low, so that we may see that tomorrow, Friday, August the 7th, which may set up an opportunity to go long either the index directly or potentially a stock that you follow that may have a bullish setup. It always helps to have the broader market trading in line with your bias within regards to your individual stock. So that's it. If you guys have any question, once again, hit me up on Twitter at FutureMeDead.com, and or you can just send me an email directly, info@FutureMeDead.com. So that's it. Best of luck.